Hey folks, how are you? Hope you're doing well today. It's Friday, May 22nd. Gonna do my trade review. So I had some trades this morning. Now I'm not exactly proud of the trades I took today just because I didn't practice great trade management and great risk management like I normally should be doing, of course. And basically, let's go over the trades here. So I decided to get short and buy some puts early on because we were having a bit of a sell-off. So I was expecting another leg down at some point. And we didn't really get that, as you can see. So we got a sell-off first thing right off the open. It was a nice sell-off, as you can see. I almost picked it up. I was watching those puts. They were priced around 40 a contract. They easily went to 80 a contract on this push, you know. The thing is, it's tricky, and I've always found it tricky so far to grab momentum off of the open because we know that there's a lot of fake outs off the open. You can see a move down and then I move back up, squeeze shorts, and then I move back down, you know. Anything can happen essentially, but we got a little pop off the open and then we started to sell off. And I was watching a lot of the sectors, and today was a great example of something like sector rotation, where you see the financial sector will be coming up, test at 22, and then slowly start selling off, while the healthcare sector is going to sell off immediately and then slowly start grinding up as the financial sector is moving down. Things like that will generally leave SPY unchanged. Now remember this, that XLF, XLV, and Qs, you know, if they're kind of playing tag team action with one another, whereas the tech sector is going up and the rest are going down, SPY is going to be kind of healthy or bullish. For SPY to go down, you need to have all sectors moving down at the same time. And that's the thing that people forget about, is that everybody, all these retail traders are buying SPY puts and thinking that the market's going to come down, and they don't realize that sector rotation is killing the premium in those SPY puts, and that's why selling SPY puts is one of the most lucrative strategies. Although I personally find it so hard to execute that trade for some reason. I don't know why. It's like against my something in my psyche, trying to reprogram my mental psyche to be able to sell SPY puts more often. Anyhow, so if you buy them, you have to be careful. You have to be very cautious about when you buy them and how you protect yourself, okay? So this is it. This is the story right here. So I'll show you my trade log to start. And basically all I traded today were SPY puts, and I only bought them and sold them. So 90.45, I got long these two puts. I bought another contract here to average down. And there was something I noticed on this fill right here, the second fill, is that I put in an adaptive market order with IBKR, and it was priced around 43-ish. And then I think there was an algo that saw my order or something and then just slowly grinded the price down, and it's like they were just like dropping the bid. It's like the bids just disappeared temporarily and then they filled my order and then the bids came back. And you know, I hate that stuff. That's just like, that is an example of high frequency trading, and they do that all the time. So be very cautious about how you fill your orders, guys. You want to make sure there's liquidity. You want to make sure that you're not just like going to be overpaying for these contracts. On a day like today where you're seeing slightly lower volume and slightly lower liquidity, you have to be careful with where you fill the options. And I mean, you should always be careful with where you fill your contracts, but you know, sometimes more than others. And just be aware that there's these algos out there that can see your orders coming in, and basically they can react accordingly to take a profit off of you in a split second. Anyhow, so I got long these puts, and then I didn't realize that we were going to pop up, and I added a little more there. It wasn't a great fill to average down. Now, market kind of stayed pretty weak. This was a 5-minute lower high that had formed, and on this push down, I managed to get rid of about a third of that position. I didn't take off the entire trade. I took off only a third of the position, and that was a mistake because as you can see, I was red on the trade here, and then coming down, I would have been at break even or a little bit in profit, and I didn't take any of it. In fact, I just kind of let it go back red after I took off a contract there. I let it go back red. Once you popped again up to this 294.50, I added another contract there, lower my average price, and then I had another opportunity after that to get out on this one right here. At this point right here is when I took off another contract, but it was only a third of the position. Again, I didn't take off all three, and that was a mistake because we eventually just kept grinding higher on low volume because we were seeing, like I was telling you, sector rotation where not all sectors are seeing weakness at the same time. The Qs were having trouble getting under 228, and that was a key area. It was basically 228.50 that I was looking at as a very key area on the longer term charts, and 228, which was basically a make it or break it level, and we broke below it a couple of times with no follow through, and that was basically the signal to just sell the puts and go away type of thing. So yeah, I messed up by staying in the puts too long, not seeing that I had to hedge myself. And that was the moral of the story. So I honestly think that I deserve the loss today. I really think that I deserve it because I didn't practice proper trade management. I didn't actually go in with a very strict stop loss on those puts. And again, not realizing that since I'm trading same day expiry contracts, that the edge is only there if the market is really moving in your favor. When the market's really moving, there's a lot of edge trading short-term options. But if the market's chopping and kind of playing seesaw effects, then the edge is no longer going to be there as much. And the edge is going to be to sell those options, because the seesaw is really what kills those premiums. And you know, sometimes it's hard to realize this, and that's why options trading, guys, is all about perception. It's all about how you perceive the market and how others are perceiving the market, and what is more likely based on the price points that are on your chart and based on what the market participants are saying about the market as they're buying and selling it, right? And options are about perception, in the sense that if somebody wants to make a bet that they're going to see a large price move up, they might take a bet. But the thing is, there's some cases where those bets become extremely unlikely. Like right now, you could have been short calls or short puts all day, and at some point you would have made a profit, simply because of the nature of this choppy market today, and because of how SPY was pretty much in a trading range all day, until now where we're starting to see a little bit more upside but not so much follow through. Anyhow, guys, so I'm going to take the loss for today, and I'm going to look back on it and realize that I wasn't practicing proper trade management anyways. So I'm going to get back to work here, and just every day is a new day for learning. Every week we get better here. So I'm still green on the week, which is good, but red today. I gave back some profits, obviously, from holding these puts too long. So guys, every day is going to be a learning experience for you, and you need to be in there every single day, managing your risk, doing your thing, and getting better at your process, and just constantly fine-tuning, man. It's like a picture. Whenever I show up to trade, I'm picturing a sculpture, and I'm the sculptor. Every time I take a trade, I learn more about the sculpture, and I will sculpt it and be more precise every single time that I enter this market and exit the market, right? So there was a lot of great trades that happened this week, but it's very easy to give back profits if you're not careful, guys. So just always be aware of that. And the number one goal is going to be, of course, staying alive, because if you stay alive, you're going to be there when the great opportunities come, okay? And if you give back all your profits on days like today, then you won't be there when the great opportunities are there. So stick around, and I hope you enjoyed this video, guys. All the best, and I'll see you tomorrow, all right? Take care, bye.